Well, FIIG's latest bond issue, $50 million for ASX-listed childcare provider G8 Education, closed successfully. FIIG is calling it a significant development because this source of funding for Australian mid-caps didn't exist some 18 months ago. Now it is firmly established as a functioning alternative to banks. Joining me now to discuss the issue as well as the wider bond market is FIIG Securities CEO Mark Paton. Mark, thanks very much for your time today. Before we get into the likes of G8 and this new alternative, I suppose, funding opportunity, markets, equity markets, bond markets, one thing on their minds, and that's Ukraine. Are you seeing much of an impact in regards to sentiment and bond pricing?
Not a lot, to be honest. The normal flows, you were talking about them before, going to safe havens, US treasuries and the like. Those sorts of things happen with the sovereign funds and that type of thing. But at the private investor level and sort of local market level, I think it's pretty much business as usual.
I mean, if we see, I suppose, intensity build up though within the situation, would you expect that to change?
Again, in the sovereign, in terms of the sovereign investors and those sorts of things where they've got big blocks of capital at stake, yes, they go to more safe haven type of instruments. So we would see that start to emerge if the conflict escalated, but not a lot of signs of that at the moment. Let's
talk G8 Education then. We saw the $50 million bond offer close. How successful was it?
Very successful. This is our 7th issue. We've now done $360 million of issues for seven issues, 6 counterparties. G8's a great story. The bond itself was well oversubscribed, $50 million, which was the maximum number they were looking for. It was our first floating rate issue, so a lot of demand and interest from investors for that.
What kind of investors are being attracted to an issue like G8?
This pathway that we've created to the bond market is for wholesale or sophisticated investors. So there's a lot of sophisticated private clients, but also middle market corporates and institutionals. Each time we do one of these issues, there's a growing number of insto funds coming to the issues, which is very good.
And when you talk about the pathway, was this an access that wasn't available previously?
Sure, these bonds are issued exactly the same way as any other rated bond would be coming to the market. The bond market in Australia is very large. It's almost $1 trillion. It will go through $1 trillion this year. And so what we're about is creating access to that, both for the investors, so being able to come in and participate in corporate bond investment for minimum parcels of $10,000, but to create a pathway for issuance for the corporates to be able to connect with those investors. So, this is about bringing both of those parties into that market.
And just on the corporate side of the equation, from what you're hearing and the companies that you're talking to, is this something that they feel overdue? I mean, are you expecting to get a rush of corporates wanting to access this style of funding?
Well, I think corporates are always looking for diversity in their funding. Today in the Australian markets, if you don't have a credit rating, you either can borrow money from a bank or you raise equity from the equity capital markets. If you're big enough and you can afford the cost and the process, you can go into the US private placement markets. So, below the top 100 ASX listed companies have been looking for a bond market alternative for a long time, beyond 10 years. We've been looking at this for the last couple of years and starting to, creating a very regular and reliable pathway for middle market corporates to have that bond market alternative.
And on the investor side, are you starting to see any interest in the big fundies, I suppose, looking to bring it on board, increase their mandate?
I think the mandate of funds is an important part of developing the corporate bond market, particularly for unrated issues. Of that $1 trillion, the vast majority of is rated paper, and there's a big chunk of it is obviously sovereign debt as well. So as the funds get more and more interest in this sort of unrated paper, their mandates will probably have to expand and grow. We've now seen over a dozen different institutions, boutique investment funds, but also some of the big institutional funds participate in these issues. And that's something very much think the industry will require if the corporate bond market is going to develop to a bigger, deeper scale.
And in terms of the private investor interest and appetite for these sorts of issuances, what is that telling you about general sentiments and desire from investors?
Yeah, G8 the statistics on GR here, there's about 500 individual investors have gone into the investment in that bond at the point of issuance, and so the average investment is around around $100,000. But within that, there's also some large funds that have taken bigger numbers in it. So generally speaking, private client investors at that sort of parcel size is where the appetite's coming from.
All right, Mark, thanks very much for joining us. Appreciate it.
My pleasure. Thanks very much.